Okay, so the following was taken from one of our classes on building a trading plan. We hold 3 of these live classes each and every week on a range of different subjects, plus have over 50 hours of classes and content in our member library. And so if you want more information, I'll post a link in the description of this video. So thanks for watching and enjoy this video. Number one, when you're trading, and a habit that you typically want to get into when you're looking at charts is you want to start mapping out the support and resistance. Now, this can be intraday support and resistance, it can be daily support and resistance, it can be weekly, but you want to map out the major levels in that chart because you need those levels mapped out in order to calculate your risk and reward and everything like that. And so the first step should be to, one, analyze the extension, look at the daily chart, see if it's extended past what it's normal to do, and then number 2, map out the relevant support and resistance levels. Like this says here, you do want to get into the habit of mapping these out. It should be something that kind of locks on. Eventually, you'll be able to kind of do it without documenting these so much, but you still want to get into the habit of just documenting the support and resistance levels on your chart. Like this says, though, the more volume in pre-market, if you're mapping out pre-market levels, the better. If the volume is not there, then it's going to be really hard to find some concrete levels to base your trade off of. And when you're working on building a trade plan, key levels are huge. You have to focus on these big levels. And if the volume's not there in pre-market, that's not necessarily a deal breaker, but you don't want to just look at random pre-market levels if the volume's not there. If the volume's not there, it might be best to actually take a step back, look at the previous days, look at the daily chart, and use those, analyze those to determine where your major levels are ultimately going to be. And like this says, just to kind of rephrase that, if pre-market levels are not concrete, then you can go back in time and look at the daily levels, weekly, previous days, so forth and so on. Everybody has their own style of doing this. My way is to use pre-market. If pre-market's not there, I typically don't trade it if it doesn't have much volume in pre-market. And if I do end up trading it without a lot of volume in pre-market, I usually use the previous few days. I usually use like the previous 3 days before that and look at the major levels there. And a lot of times I'll end up using half or whole dollars. But everybody has their own way. And this is just my way of doing it. And so like this says, within this step, you can also look at the extension level of the stock to judge the viability of the setup. I definitely love playing off of extension. That's one of my big things is I love looking for overextended stocks, terrible companies, and then shorting the heck out of them. That's my favorite thing to do in trading. And yeah, you do want to judge the extension as well. If a stock has been going on, a really good way of doing this, I think I went over it in a previous class last week or this week. But, if a stock has had 4 or 5 green days in a row, you might want to be very careful longing that stock. It might be a better short opportunity, at least in my opinion. If the stock has had multiple red days in a row, you want to be very careful shorting that stock. I know earlier this week, maybe last week, I ran into NIO. And as soon as I got into the trade, before it had even turned against me, I looked at the intraday chart and I looked at the previous few days. I looked at like the past 3 days and I noticed that NIO had dropped substantially back to back consecutively for the past 3 days prior for me entering the trade. And so immediately I knew, oh no, this one's probably extended on the downside or oversold, and my short position right now probably is not going to work out. Now, of course, I still held it to my levels, but that is the point of analyzing these things before you get into the trade. Of course, I still make these same mistakes myself, but it's still a good learning experience. And, analyze the extension before getting in the trade. It's huge for you to kind of create your own plan. It's a very relevant thing when you're making a plan in trading, and it's something that you should get into the habit of doing. All right. So, after you have all that down and you've analyzed the extension and you understand kind of how you're going to approach the support and resistance on the chart, the next thing you want to do is map out your risk and reward. Now, this is probably one of the most important things in trading is risk and reward. It's something that Mitch and I constantly preach about is because it's super relevant to your success as a trader. And now, once you see potential for a setup to fulfill, and this takes a little bit of practice and conditioning for you to be able to spot a potential strategy fulfilling beforehand, you want to get into the habit of just watching for that to fulfill and then analyzing that to judge your risk and reward targets. And so basically, like for instance, with the VWAP fade, a lot of the time, if I can pull up a chart here, let me see if I can just find a VWAP fade really quick. Let's see if I could just find a VWAP fade. Just for this example, NIO doesn't really fade. It hasn't been fading very well lately. Okay, here's one. Okay, so even before, when this stock, here's a VWAP fade right here. And, by the time the stock gets to right here, it's almost a little bit too late for me to start calculating risk reward. It doesn't make sense to start calculating risk reward when the stock is right here. I'm going to have to do it extremely quickly if I'm going to start using it here. So it actually makes a lot more sense, at least for my specific strategy, to start calculating it when the stock's down here. That way I can say, okay, well, the VWAP's here. I could use this level, as my risk. Maybe this level even. And so I can use one of these levels as my risk. But again, at this point, it's almost too late. This is not the area where I want to start calculating risk reward. I want to start calculating risk reward when it's down here in anticipation of this move back up. And so, people say, well, you calculate risk reward quickly. Not really. I just calculate it early. And then I adjust it as time goes on, because it's easier to adjust what you already know as your risk reward than kind of doing the entire thing on the fly in a few seconds. That's going to be really tough. And so, with whatever strategy you're using, start being able to look for it beforehand, before it actually follows through. Look for the little subtle indicators that are going to let you know that this one might turn into a VWAP fade, maybe turn into a VWAP bounce, 1 minute pullback, triangle, so forth and so on. And so master your strategy is really what that's about. You want to learn your strategy in and out. And that's part of it, is understanding when you're going to start looking to calculate that risk reward. Because if you wait too long, it's going to be really tough to kind of squeeze all of that analyzation in here, because you're only going to have a few seconds to really, pull the trigger on this one, let alone calculate risk, reward, sizing, range, so forth and so on. So yeah, so make sure to consider major confirmed support and resistance, as well as half and whole dollars as your guide. Those make calculating it super easy. Half and whole dollars being that round number, make it really easy for you to calculate it, because then, if it's a quarter, 25 cents, 50 cents, it's a round number, and so it makes it very simple math to calculate your risk and reward, especially if you're using half or whole dollars. Like this says, many times risk can be judged using previous highs and lows. That's another way I do it, which makes it go pretty quickly during previous intraday moves. And then you can use pre-market or historical levels to actually confirm that. And that's actually the method I use with the VWAP fade a lot. Is very easy to calculate, previous high or lows. Those are levels that are just sticking out in the chart, and so it makes sense to use those levels. Like this says, reward levels can be judged using the same method, although I tend to prefer to use previous high and low of day as my guide. This is subjective and varies by the trader. You always want to find your own style of doing it. Every trader is a little bit different. But like I said, I don't think I necessarily calculate it quickly. I think it's more so I use very concrete levels like half and whole dollars, which are round numbers a lot of the time, and that just makes calculating it go quicker. All right, so here's an example of that. We have the reward level. Like I said, I like using these previous low of the days here. Let's see. Like I said, for reward levels with VWAP fade specifically, I like using previous low of the days. That's because a lot of times with the evolution of a trade, the stock will at least come back and test those levels, so it makes a lot of sense. You have the reward level here, and this is a really good example of when the volume's not that good in pre-market. I kind of typically like to go back to the previous day, look for some confirmation there, not only there, but during the intraday move already here. And it just gives me a really obvious risk level to use in the trade that has beneficial risk-reward, positive risk-reward ratios, like 2-to-1 it looks like in this one, maybe a little bit better than that. And so it just makes a lot of sense. But you want to see confirmation. And again, just like I said in the last slide here, a lot of times I use previous low of the days as my reward target for shorts. And I use pre-market to confirm that. And so here's the previous low. And then in pre-market, we do have some confirmation there as well. And so confirmation is always key here when you're calculating risk reward and building your plan. One of my favorite things in a trade, and even if we look at today's trade as an example, I could pull today's trade up. Oh, what did I trade today? Zyne, Z-Y-N-E was what it was. What I'm trying to show you guys with this is that one of my favorite things when I'm in a trade, so this was my risk level. This was my risk level right here. It was 625 maybe? No, I think it was actually 630. But one of my favorite things in the trade is when a stock goes up, it tests my risk level, and then look, I can even extend this to the left, and we got a lot of confirmation there the previous day. But one of my favorite things is when it tests my risk level, but it doesn't break. You see that confirmation, beautiful confirmation there. And that makes the trade, you'll hear me talk about it on stream all the time, that makes the trade really easy at that point because it's established a new resistance level coinciding with the previous risk level I gave myself. And so it's confirmed it. And now, especially if it breaks that level, now I can get out the trade. It just makes it super easy on me. I don't have to question whether that's the right risk level or not. When it confirms it like this, I know that's the right risk level. And so I love it when this happens, even though it's a little nerve-wracking while it happens and it's testing that risk level you give yourself. When it confirms it like this, I feel so much better about the trade once it does break down, if I'm being honest, because then I know that that's a decent risk level, and if it breaks it, it makes it really easy and I can just get out the trade. The next thing you want to determine is it going to be a scaling trade? Basically, are you going to scale in or out of this position? And so again, you want to determine whether you'll be scaling in and out. An easy way to do this is to think about your reward target and risk length. How big is your reward target? How big is your risk relative to the range of that stock? If your reward target is huge relative to the range, say the range of the stock is like 50 cents and your reward target is 25 cents, then that's a huge reward target relative to that stock's range on that particular day. And so with that in mind, it might be a good idea to actually scale out of that because that is a very optimistic reward target, meaning, it might not actually get to that reward target. And so in that case, you might want to scale out of that position to protect yourself in that trade. Now, if you think about the other side of it, if you are planning on a very short-term day trade, if you're planning on scalping it, if it's a red to green move and you're just planning on holding it for a minute or two, then it might be better to just go all in and out, just be one-to-one. Another advantage of doing it one-to-one, where you're just going to be shorting it and then covering or buying and then selling, not scaling in and out at all, is that it's going to be a lot easier for you to analyze and it's going to be a lot easier for you to make sure you get your full reward target. And so there are some benefits of just taking it in and out, all in or all out, because that's going to make it a lot easier for you to analyze the trade, make sure you get your full reward target in relation to the risk you're taking in that trade. And so there are some pros of, not scaling in positions. One of my favorite things to do is, or not my favorite thing to do, but one of my kind of things that is kind of my style in trading is I like to just trade once or twice. I don't like to trade a bunch of different times because that makes it really easy for me to analyze. It makes it really easy for me to hold out for green weeks and green days. And so everybody's different, but there's pros and cons to each. And so you do want to determine that before you actually take the trade. And step 3, analyzing range to determine the share size. This is something we've gone over before. So you do want to look at the range of a stock. Once you have mapped out your levels in risk and reward, you want to look at the range, and that can help you determine the appropriate share size to take. And so one of the ways I do it is I just look at the high and low of the current day, maybe pre-market if that's relevant to you, depending on how long it's been since the bells ring, how long the day has been in session, and then analyze the high and low and see how much that stock has moved on that particular day. If it's too close to the open, you can use pre-market a little bit more, but I tend to like to just use the intraday range. And now this is incredibly important because it helps you understand, just because a stock is expensive does not mean that the range is necessarily going to be bigger than a stock that's cheaper than that. Or just because a stock is cheap doesn't mean the range is going to be smaller than a more expensive stock. Float size is definitely relevant here. And, you want to analyze that as well if you can. But a quick way to measure it is just how much has the stock moved during this day. And so we can look at an example here. You can look at the high and mark that down, look at the low, mark that down, and find the difference. And the difference between this and this, I think this was AMD a while back, it's $1.93 range. So basically, this stock has moved almost $2 during the intraday session on this particular day. And so you know that's a pretty big range overall. It's not huge, but it's not small by any means. And so if you're going to take a position in this stock, you might want to scale down relative to a stock that has a 50-cent range. You know, if the stock is a 50-cent range, you might want to scale up in sizing and use a little bit larger sizing. And so that's why range is important, and it's something that you have to think about whenever you're building your plan on that particular day. And it's something that you have to look at, and this is one of those things where conditioning plays a huge factor in it. You know, once you trade certain stocks, you'll be just used to the range and you'll be able to analyze it quicker. But if you're just starting out, it can take a little while to just be able to look at this stuff on the fly, analyze it, and then move on with your trade. So any questions before we can move forward? All right, so step 4, execution. I'm just going to make this simple. Now the hard part's done. Everything that was hard about trading has basically been finished except for handling your emotions, which is kind of like a trick phrase. The emotions is really tough to deal with, but the hard part is done. And you can tell yourself, okay, I've done this entire thing. I've done the hard part. Now you just have to follow directions. You know, like I always say, think of it as a walkthrough. If you like video games, think of it as a walkthrough. If you like code, think of it as a walkthrough with code. If you like putting together a desk, I don't think anybody does, think of it like your instruction manual. You know, that's the hard part of the trade. That is the most difficult part, is building the plan, calculating everything. Once you're done with that, all you have to do is follow directions. Like this says, remember, you have nothing to fear. Your trade is mapped out already for you, and all you have to do is follow your levels. That is it. This should help to curb your emotions in trading and thus help you find consistency. And it's one of the biggest things. Just takes conditioning. But that's the hard part, is building the plan. Once you're done with that, it just takes you clicking the buy button, clicking the sell button, and watching the trade and following your levels. That's it. Like this says, remember to do this in each trade you get into, and it is extremely important. And it's something that you'll learn can really help you find consistency in trading. Let's look at a few examples of doing all of this, or attempting to do all of this, if I don't forget anything. So let's pull up one demand here. And let's at CRON. Let's get this out here. All right, so this is a VWAP bounce that we're going to be looking at today for CRON. So this is a VWAP bounce. Now, like I said, the first thing you want to do, I don't want to start looking at this. I don't want to wait for the stock to pull all the way back to the VWAP here to calculate the VWAP bounce. You know, I don't want to wait for this stock to be all the way down here by the time I start analyzing this for a VWAP bounce. Instead, I want to start looking and calculating my levels right now before the stock pulls back. And so if the stock doesn't end up pulling back, that's fine. I can move on with my trading day. But if the stock does pull back to where I want to enter, I'll be prepared. I'll know my entries and exits. I'll know my risk and reward, and I'll be fine in that trade. Now, I've kind of already mapped some of this out here on Cron. All right, and so we can map out all the major levels here. So first off, we have the... let me get this ready. First off, we have the whole dollar of 21. We have 21.50 already hit here. We have 20.90, which looks like there's some support here, and pre-market as well. Let's see where else we got some major levels here. Looks like we got a major level here to consider, and that's about it. Maybe 21.40 here. So we can map out the major levels. But just to make it easier, and for the VWAP fade, I'm going to take off these two levels, and I'm just going to stick with the whole dollar of 21, the half dollar of 21.50, and this 20.90 level. Now, if we're planning to enter the VWAP, if we're planning on entering at the VWAP right around 21.13, where's a good risk level here? What's a good risk level relative to where we're going to enter the trade? What do you guys think? Is if we're getting in on a long play, a VWAP bounce, everybody should know what a VWAP bounce is. Where's a good risk level for us to enter? If we're going to enter right around 21.15, 21.13, right around here, where's a good risk level? 21. That's right, Casey. That's a very, very good level. So our risk level, Casey hit it spot on, is 21. It looks like a reasonable level. You could, well, here's the thing. You could either do 21 or you could do 2090. Now, 2090, if we're going to give ourselves a risk level of 15 cents roughly here, and our reward target is going to be where, guys? Typically with the VWAP bounce, where's our reward target usually going to be? High of the day, that's right. And so this 2150 level, another $half level, reasonable reward target. And so if our entry is 2115, we're just going to say 15, even though it says 13, just so it's a easier number to calculate. And our reward target is 2150. What's our reward? Yeah, Eric, I don't blame you, brother. I don't blame you, man. So what would our how much would our reward be? How many cents is our reward here? That's right, Casey. You're right with it, but we're gonna look at this. Not 45. It's actually 35 cents. So from 21.15 up to 50 is 35 cents. So our reward is 35. And if we use this $21 level, what's our risk? If we use our $21 level as our risk in relation to 21.15, how much is our risk? 15 cents. That's right. And so our risk is 15 cents here, and our reward target is 35 cents up here. And so it's a little bit better than 2 to 1, basically 2 to 1 here, which is great. That's fine. That's a good reward, risk to reward level, solid risk to reward level. We have some confirmation and pre-market to back these levels up. We got some confirmation here and here and here. And so we do have some confirmation and pre-market to back up our risk. It's the whole dollar. That's kind of gives it a little bit more confirmation here. Our reward target's the $half. And so we got a nice little trade here set up. You know, we got a tight risk, better than 2 to 1, reward to risk. And now at this point, what's the next step here? We know our risk, we know our reward. Say we only wanted to risk less than $100 on this trade. So say we wanted to risk less than $100 on this trade, what kind of share size should we take? If our risk is 15 cents and our reward level is 35 cents, what kind of share size should we take with this trade? With that in mind, say if we only wanted to risk $100, we could use 500 shares, because 15 cents of risk, that would mean we're risking $75. And so 500 shares, if we want to risk less than $100, is reasonable. Now, what's the range of this? What's the range of this stock? The next thing we can look at is the range. What's the range of it? So we can see the high of the day is 2150. The low of the day is right around 2060, maybe 2050. So if the low of the day is roughly 2050 and the high of the day is 2150, what's our range? Eric's right. It's $1. Or it's a $1 range. Right. So from 2050, this is just estimate. Really, it's about 98 cents, 97 cents. But our range is about $1 from 2050 to 2150. And so a relatively small range, not huge, not small. We got a risk of 15 cents. That's reasonable. And so now we can be prepared to follow through with the trade. We know the range. We know our risk. We know the share size we're going to take. And now we can go ahead and follow through with the trade, looking to enter it at the predetermined level that we gave ourselves. Do we want to scale in this trade? We already know the range of the stock is 95 cents to $1. Our reward target is 35 cents. That's basically a third of the entire range of that day. And so with that in mind, would scaling be a good strategy to implement, scaling in or scaling out of this position? All right, and so like I said, so since we know the range of this stock is about $1 and we're risking, and our reward target is 35 cents, should we scale? Right, Eric, very good point. Yep, Eric says taking some off at 2140. Why is that a good area to take some profits off, guys? Why is 2140 a good area to take some profits off? Prior resistance. That's right, Tech. So we do have a lot of resistance here. You can see there's a lot of different areas here. We got a lot of confirmation in this 2140 level. We have here, we have the body here, we have the low here, we have the top here, we have the body here. And so we got four or five confirmations in that level. And so 2140 is a reasonable level. Now this next part is just subjective. You know, you don't have to take any off at 2140. You could be a little bit looser with it and try to let it go all the way up to 2150. But if you're going to take some off at 2140, you know, this part's subjective. You can take, you know, if you're in with 300 shares, you could take, if you're in with 500 shares, you could take, let's fast forward a little bit here. Some people are going to want to take off half of their position, 250. I'd probably take off maybe 100 at 2140 just to bank some. Then take maybe another 200 off at 2150 and then let the rest work after that. See if it actually breaks the $0.50 and breaks out here. But everybody's different. And that part is completely up to you. I can't tell you what to do in that situation because, you know, there's not really a right or wrong answer there. You know, some people are going to want to take more off and be a little bit more conservative. And some people are going to be a little bit, you know, some people are going to want to let it work a little bit longer, and that's totally fine as well. It all depends on the person. And eventually, just to fast forward through all of this, we do get a nice breakout there. And so that part's all subjective. And so that's basically what I was trying to show you guys, is just building a plan around everything. You know, and the way to do that is to anticipate the move beforehand. Not wait until it gets down here. At this point, you're in, you know, you're in the red zone here. You're in panic mode. You're trying to calculate everything on the fly very, very quickly. That's not the right area to start building your plan. The right area to start building your plan is really, honestly, for me, is right up here. This is where I'm going to start building my plan. You know, because that way I know I can change minor details if the VWAP moves up or down from where I started to calculate these numbers. But it's going to be a lot tougher to change minor details than it is to going to be able to create the entire plan kind of in crunch time right here, where it's going to be really stressful. You're going to have to do it quick, and it's not going to be fun or easy to do. And so that's the point I was trying to get off with that one. And now we got another example we can go over. All right, so now we got ACB. Nice little VWAP rejection fade setup here. But again, this is not where we want to start calculating. We don't want to start calculating risk reward here. This is not where we want to start calculating it, because it's going to be really hard to figure everything out at this point. We're not going to have that much time. And so it's actually a little bit better to wait. Let's see when this exactly was. It's going to be a lot easier to start calculating risk and reward here. Now, let's map out some support resistance just like the last one. And this one's a little bit different. Let's see, we have a level here at 1022, a lot of confirmation there. We have another level up here, maybe another level here. All reasonable. Let's make this just one. What else do we have? We got the low of the day here that we can map out. Maybe have, yeah. Alright, that level looks reasonable enough. Alright, so if we get in at the VWAP, if we plan to get in the VWAP here for a VWAP fade, everybody should know what that is as well. We plan to get in here. What's a good risk level? There's two different options per our chart here. There's two different ways we could approach it, two different options. Yeah, I'll take a look at that tech once we're done with this example. That's right, Casey. So 1022 is probably where I would go with my risk. We could also use 1024, but if we're going to set the previous low of the day here as our reward target, and that would give us, what's our reward here? Roughly 15 cents. From 1017 down to 1002 or so, 1003, 1002, roughly 15 cents. And so our reward target is 15 cents here. And our risk is from 17 up to 22. What's our risk? All right, so if our entry is 1017 and our risk is 1022, what's our risk? 5 cents. That's right. And so if our entry is 1017 and our reward target is 1002, what's our reward? 15 cents. That's right. And so what ratio is that? 3 to 1. That's right. Our risk goes into our reward 3 times. So it's 3 to 1. You know, our reward is 3 times larger than our risk. Right? Good ratio. Very good ratio. And now, what's the next step? So we mapped out our support and resistance. Now let's look at the range of this stock. So basically, if we go from 10.02 up to 10.32, what's our range on the day? What's the range on of the day on ACB on this particular day? 30 cents. That's right. And so, is that a big or small range? Relative to, we're already, 30, 40 minutes into the day. That's definitely small. It's a small range relative to a lot of these other stocks that we look at, and definitely, relative to the price. It's a $10 stock, so it's not a cheap stock necessarily, and so that's a pretty small range overall. So with that logic, what should we do with our sizing? Our risk is only 5 cents. That's a small risk. The range of the stock is only 30 cents. That's a small range. What should we do with our sizing? So Tech had a good question. Yeah, go hard. 1K. Yeah, I mean, bigger sizing for sure. So Tech says, is range and spread the same thing? So no. So spread is the difference between the bid and the ask. So if you look at the level 2 down here, Tech, you see this level 2 here, the blue level 2. The bid is at 10.07. The ask is at 10.08. That means the spread is 1 cent. 1 cent. And so it's a tight spread. It's a small spread. It's good. It means you're most of the time you're going to get filled within 1 cent of the price. Right. And so the spread is just the difference between the bid and the ask. And so if the bid here is 10.07, the ask is 10.08, the spread's 1 cent. If the bid was at 10.05 and the ask was at 10.10, the spread would be 5 cents. Right. All right. So, yeah, no worries, Tech. So like I said, if the range is small, if we have a small range, the range of a stock, Tech, is basically how much the stock has moved already on this particular day. And so what we do by that is we look at the high and the low. The high is right here at 10.32. Wait. The high is right here at 10.32, and the low is down here at 10.02. And so that gives us a 30-cent range of this stock. Basically meaning since the bell rang on this particular morning, the stock has moved 30 cents, which is a small range. That means it hasn't really moved that much relative to most other $10 stocks. And so it pretty much means it's probably a higher float stock, which I think ACB is. But with that in mind, we have a small risk. The range is only 30 cents, and our risk is only 5 cents. And so with that in mind, we're only risking 5 cents in this trade. We could scale up a little bit in sizing. Let's say we can use 1,000 shares. If we don't want to lose over $100, and say, if we're risking 5 cents with 1,000 shares, we're really only risking $50 in this trade, maybe a little bit more with some slippage, but around $50 is what we're risking to potentially make 150 with a 15-cent reward target. And so again, we have all that planned out. We know our range, we know our sizing, we know our risk, we know our reward, we know our entry, and now we can just let the trade work. Finally, we get some movement here. And let's see if we can get a pullback back up to the VWAP. Let's see. All right, we get the pullback exactly where we wanted it to, up to the VWAP, and we can get in with 1,000 shares and be relatively protected. We have a tight risk of 50 cents. Our reward target's down here around 10.02, and we can just let the rest work. Now, if our reward target is 15 cents and the range of the stock is 30 cents, should we scale in this trade? It's all subjective. There's some benefits of just using, one share. Let me reset this so we can get a new profit and loss here, and I can just get back in the trade. I mean, I think we should, Casey. The reason why, so it's all subjective. I think we should in this case because if you think about it, the range is 30 cents. But our reward target is 15 cents. And so that's half of the entire range of that stock on that particular day. And so I do think it would be wise to scale because, I mean, our reward target is half of the range. You know, if the range is 30 cents and our reward target is 15, you know, we're effectively trying to get half of the range. And so because of that, you know, the odds might be a little bit lower that we're going to get that full reward target. And so I do think scaling would be wise. But it's all subjective. That's just my take on it. Every trader's different, and every trader is going to kind of approach it with a different mindset and a different way. And so there's no right or wrong answer, really. But if we do scale out of this trade, where should we take profits? Where's a good place for us to take our first profit? This is all subjective again. I think 10-10 looks reasonable. You got some confirmation there. Extend it to the left, we might get some more confirmation. Not really, but 10-10 I think is reasonable. You got a lot of wicks, bottoms of wicks here. And so since we got 1,000 shares, yeah, we could scale out a little bit and approach it that way, sell some at 10-10. But again, it's all subjective. It all varies by the person. We can just fast forward here. And we do even get some kind of confirmations in that 10-10 level. And so I put the pointer right where that means you were looking at the right level, though, Tiny. That means you were looking at the right level. That's a good thing. All right, so look, exactly, 10-10, reasonable level, and we get a move right up to 10-10. Let's see if I can pause it here so we could just explain. We could take 300 shares off here. And then we've taken some profits. We made about 20 bucks on the trade, and we can just really let the rest work. Maybe take another 300. And so we get a bounce right at 10-10. Let's see if we can fast forward in this. See if we ever get a breakdown here. I think I remember watching this trade too on ACB when it happened. There we go. We got a nice move down to the low of the day. Missed it barely, but that's okay. We'll just fast forward. Alright, well that's basically the last example. You could probably see how we could approach it. Take some more at 10.03 is probably how I would do it. Leave another 300, let the 3 or 400, let the rest work. See if we get a bigger breakdown, maybe down to... my next goal with this one would probably be the previous day's close, which is 9.94. So right here is probably where I'd look to take my last little bit off, because at that point the gap's effectively filled. But it's all subjective. Everybody's different. But yeah, that's probably it for tonight, guys. So we got any more questions before we close it down? Alright guys, that's it for this video. So if you want more information about these classes, we hold 3 live classes each and every week on a range of different subjects. And like I said earlier, you can check out the description for more info, and thanks for watching.